In this video, I'm going to talk you through how much income my $140,000 dividend stock portfolio paid me last month. But I'm also going to share with you which stocks paid me the most last month, the couple stocks I thought were overvalued and what I did about them. I'm going to show you how I use option trading to help fund buying these stocks that end up paying my groceries to allow me to film videos for you. Before I share all the details of my dividend portfolio, let me first show you where the money comes from to buy those stocks. Here you see an Excel spreadsheet where I track all the net cash I receive by buying and selling options. My plan is to take at least 10% of the cash that I generate every month, and last month was $9,700, and use that cash to buy some stocks outright. So I took cash from my option trading account and used it to buy some stocks last month. I'm going to show you that in just a second. In just a minute, I'm going to share with you two stocks that I sold last month, why I sold them out of this account, and also going to share with you one stock that I bought out of the approximately 20 that I bought last month that I believe is currently undervalued. But first, I wanted to briefly show you the dividends I collected last month in this account, and then I'll show you the total that this amounted to. So that was a screenshot, but here it is broken down in my Excel spreadsheet. I like to show real numbers, real accounts, so you know I'm not making this stuff up. So now I'm going to scroll down through these dividends and notice that some of them were regular dividends and others were qualified dividends. And here you see the ticker symbols that paid me dividends last month. But in all, in this account, it's not just a dividend paying account as you're going to see in just a minute. It also contains some very low and even non-dividend paying stocks. But in this account last month, I pocketed $293 in dividends. Now last month was a little bit lighter of a month because as you see here, the income in this account, it ranges from generally around $300 per month to a high of around $368 per month. My broker's estimating that over the next year, I'm going to pocket around $4,500 for the year in dividends alone. But remember this week's grocery bill I shared with you at the beginning of this video? So which stocks paid for that grocery bill? Now I want to highlight some of the higher dividend paying companies that actually help me pay for bills right now. So one of the highest paying ones right now is Verizon. And notice that it definitely had the ability to cover my bills for this week, even if you count the little bit of extra money that wasn't on that receipt for the steaks that I bought. Verizon paid me $56 last month. Now if I move myself out of the way for you, notice that here's another company that pays really nice high dividends, and I was buying this company back when it was undervalued. Now it's more fairly valued in my opinion. That's the MLP, ticker symbol EPD, Enterprise Partners. And notice it paid me $62.68 last month. Now another bigger one was NNN, it's a REIT, and it paid me $34 last month. Here's one more that's been paying a nice high dividend, it's ticker symbol CAG. Now recently its earnings have been kind of beaten down, so the stock has gone down in price, but it's still paying a nice dividend. In fact, last month it paid me $26.60. So there are several stocks in this portfolio that had the ability to pay for my grocery bill that enabled me to come to the mountains and film videos for you this week. Now before I show you the power of these dividends, especially over time in this portfolio, let me ask you, what dividend stock paid you the most last month? Drop that ticker symbol down in the comment section below. Now let me share with you my top payers and let me show you exactly what dividend growth looks like over time. This is a portfolio snapshot of the portfolio I just shared with you on my brokerage. There's a couple things I want to share with you in this portfolio. First, notice that our forward-looking average yield is 3.7%. And Seeking Alpha says this portfolio is relatively safe. It gives it a 3.76% safety score. There's a column here I want to share with you because it's very important, especially if you're looking for dividend growth. And it's the dividend growth over the past 5 years. Now I'm going to start with the worst, then we'll work our way to the best. But notice that some of these are not dividend paying stocks, and some of them actually have had declining dividends. Keep in mind that when you're investing in stocks, they're not all going to be winners. They're not all going to go your way. Here you see in this portfolio that has over 100 stocks and ETFs in it, only about 6 or 7 of them have actually had declining dividends over the past 5 years. They include LAG, VFC, MPW, which is the hospital REIT, HR, MMM, which we're all probably very familiar with that company, Disney, WPC, and GMRE. But other than that, all the other companies, they've actually had growing dividends over the past 5 years. Now I scroll up here to the top, and we're keeping an eye on this column right in here. If I scroll to the top, notice that some of them have had very strong dividend growth. And that's where that term snowball effect comes into play. So that these dividend paying companies, they can really snowball how much income they pay you over time. And what compounds that is if you do what I do, which is try and buy companies when they're trading at a discount. An extreme discount is even better. I'm going to show you an example of that in just a minute. So while the stock market or the prices of the companies you own, it may be up and down, as you've seen, the dividends are really consistent. And over time, they tend to grow nicely. And that means you're putting more and more cash into your pocket. The next question that comes up is, when should you buy companies and when should you sell them? Now I'm going to share one of the over 100 ticker symbols that I own right now. And I actually buy around 20 to 25 stocks a month. And when prices get overvalued, as you're going to see in just a minute, I sell those shares. So here's a company I started buying a while back. It's OTEX. So I've been buying OpenText all down this area down in here where I think it's undervalued. And the reason is that I believe the true value of this company is around $51 per share on the low side to $56 per share. And that's based on long-term fundamentals. I look at multiple metrics, and based on long-term fundamentals, I believe the company is worth $51 to $56 per share. So even though over the past 6 months, we've had a nice run up of about 60%, I still believe it's currently undervalued. So I've been accumulating shares of this nice dividend paying company, OTEX. Now when would I consider selling this? Well, once it got close to $51 or $56 per share, I began to watch it to look for opportunity to sell it at an overvaluation price. Now I believe that's fair value, so I wouldn't necessarily sell it at 51 to 56, but I would begin to watch it. And the reason I like to sell them when they're overvalued is that you're kind of giving up some of that opportunity cost. Yes, I want to collect dividends, and a dividend paying stock like OTEX is awesome to own, especially when it has a nice history of growing that dividend. And just so you see what I'm referring to, here's the 5-year dividend history of OTEX. Notice it's a nice, growing, and very stable dividend. So although the stock price has been all over the place, the dividend has just consistently grown over that same time frame. When you buy a company like this that's potentially undervalued, not only do you get benefit of these nice, consistently growing dividends, but you also get that potential stock price appreciation as the company returns to its fair value. Now granted, anything can happen, and a stock that's beaten down can continue to go down. But if the fundamentals are still very solid, I feel very comfortable buying a company like OTEX. But I'm also not tied to it forever. Once it reaches a price where it's fairly valued, or even better, overvalued, that's when I begin to look to sell a company, even a great company like OTEX. So OpenText is a company I've been buying for quite a while. Now let me share with you another one that I'm accumulating shares right now. The company is Edison International, ticker symbol EIX. Let me show you what I like about the company. I'm also going to share with you some things that you want to keep in mind before you place a single penny in this company. So first of all, as you see here, it has a nice high starting dividend yield. That dividend is about 6%. So you might be saying, well, yeah, it has a nice high starting dividend yield, Randy, but does it consistently grow that dividend? Well, here you see on Seeking Alpha that indeed it does. In fact, they rate it as an A and B minus. In fact, looking back over the 20-year history, notice the consecutive years of dividend growth is at 20. And whereas the median dividend growth in that sector is only 10 years. Now let me scroll down here and you can see the dividend history. Notice that going back to 2004, it's paid an increasing dividend. And notice the slope of this chart. It just goes up and to the right. That's what you want to see. Now, unlike the dividend chart, the stock chart doesn't just go up and to the right. In fact, here's what the weekly chart looks like for EIX during that same time frame, 2004 to present. Notice that unlike that upward sloping chart that goes up and to the right, this one is all over the place. And recently, over the past 9 months or so, it's experienced a very sharp decline in price. And that's one reason why its dividend yield is so high right now. Now, when a consistently stable and profitable company like EIX, when its stock price is beaten down, there's always a reason for it. And the same is true when it comes to EIX. There's some fears over wildfires as well as some other concerns. But overall, in my opinion, those fears are already priced into the value of the stock. And that's why I've been accumulating shares of Edison International in the recent months. Another question I get asked, since most of you know that I trade a lot of options, is Randy, are you going to sell options against this account? The answer to that question is most likely in the future, but right now I'm not. There's a couple of reasons for that. First of all, you need at least 100 shares of a stock to sell a cover call option against it. I do have a couple of them that fit that description. However, another reason is that I want to benefit from stock price appreciation, so I don't want cover calls in any way to hinder my stock price appreciation in this account. However, once a company is fairly valued, or even better, overvalued, then at that point, if I own 100 shares, I will begin to consider selling cover calls against those positions. But I have other accounts that are totally dedicated to trading options, whether it's selling cash or put options or doing cover calls. But in this account, I mainly want to benefit from dividends and from stock price appreciation. Now I want to share with you my top yielders because there's some nice lessons for dividend investors in the screenshot. I'm then going to show you some of my top winners. And at the end of this video, I'm going to share with you 2 companies that I sold this month because I believe they were overvalued. I've now sorted this list by dividend yield. So we have the highest dividend yielding stocks up top. And there's a couple of lessons in here. The highest one right now is IIPR, which could be experiencing a dividend cut soon. Notice overall I'm down 53% on this one position, but it is paying a nice high dividend. Right now it says it's paying me $7.60 per share for its dividend, but it is experiencing some problems with some of its tenants, and that's one reason why the stock is so beaten down. Notice that overall, even the percentage-wise this position, I've lost a lot, 53%. I'm only down about $1,800. That's $1,800 of my favorite dollars. But the reality is, in the big picture, it's not that much, because notice that it's only 1.14% of my portfolio. Position sizing is something I wanted to mention to you. It's very important to not allow any one position to become too large of a portion of your portfolio, no matter how good of a sale it appears the stock may be. This is a lesson I really wanted to share with you. It's very important that you understand that no one's going to have all winners. We're going to have some losers. So it's very important to keep your position size in check. That way when some go against you, although they will hurt you a little bit, they won't destroy your account. As you're going to see, although we've had some go against us, we've had a lot more go our way, and go our way in a big way. Here we see a couple more. This is a company I really like, UPS. I used to work for them back 30 years ago. And it's paying a nice high dividend also, 7.7%. But I'm down in that position about 11%. But I still really like the company. I feel good about it. So I'm going to keep owning it. And I may even accumulate some once its fundamentals kind of settle down. Then one more I point out that I'm down about 30% is CAG. And this is a food company. Like a lot of food companies, it's kind of gotten beat up. But while it's beat up, I'm still getting those nice dividends, 7.39%. As a matter of fact, let's jump over to Seeking Alpha. Let's just look at ConAgra's dividends. So now I'm back over on Seeking Alpha. And by the way, if you like what you're seeing on Seeking Alpha, they offer a discount if you use my link. So I'll leave that discounted and free trial link for Seeking Alpha down in the description below. But notice the past 10 years dividend history for ConAgra. Notice it's pretty stable at 19 cents per quarter, and then it raised it to 21. And starting in 2020, they began to raise it up to 28 cents, then 31 cents, then 33 cents, then 35 cents, and that's where it's at now. So although the stock is down, as you saw in my account, my dividends have been very consistent. They've even been growing over time. This is not a company I plan to keep for the long term. If or when the stock price bounces back, I probably will sell it. But right now, I'm enjoying collecting these really nice high dividends. So I shared some of my losing positions. Now let me share some of my winning positions. And up top, you see some of our biggest winners. We have Meta, which is up over 400%. And I actually trade a 3x levered ETF. It's TQQQ. And I'm up over 360% in that position. And keep in mind, this account is not that old. I opened this several years ago. So these are some nice returns over the past several years. A few more positions. LMAT, I'm up 246%. And we see another position here in AbbVie, I'm up 97%, as well as one more company I really like and I use almost every week, which is Netflix. I'm up almost 90% in that one. So although we do have some losers, we also have some winners. And notice that these that are up a lot, they generally are not high dividend paying stocks. Generally, they don't pay much or any dividends. However, most of the companies I trade in do pay some nice dividends, as you see here. So overall, this account over the next year, I'm looking forward to collecting that $4,535 that my broker is estimating I'll be receiving. And I'm also looking forward to continuing to grow this account and to grow that dividend. Because although right now it is paying some bills, I want it to pay a lot more bills one day. I'm going to continue growing this account by buying companies that I believe are undervalued and selling some that I believe are overvalued. Now, speaking of overvalued, I wanted to share with you two companies that I sold this past month because I felt like they were overvalued. The two companies I sold last month because I believe they had reached fair value or maybe even overvalued were CME and eBay. They were both companies I had really nice wins and I bought them when they were discounted, but when they reached a spot where I didn't think that they had the potential to really go up anymore, I decided to go ahead and sell them. Now they may continue to go up, but once I believe a company is overvalued, if it doesn't have a lot of growth in front of it or tremendous growth potential, I'm gonna sell that company off and replace it with another one that I believe is undervalued. And that's what I've been doing in this account, buying stocks I believe are undervalued and selling them when they get overvalued. Here you see I bought some of EIX last month in August when I bought them at $54 per share. If you'd like to get an alert whenever I buy a stock or sell options, check out the benefits of becoming a patron down at the link in the description below. If you'd like to see how I find companies that I buy outright that I believe are undervalued or at worst fairly valued to either buy outright or to sell options against, check out the video at the link above and the description below entitled Speed Trading, Finding High Probability Setups in Just a Few Minutes. Until next time, happy investing, and we'll see you again soon.